Hi, welcome to Market in a Minute. Actually, it's probably about 10 minutes, okay? Earnings reports are coming out. They're okay. You know, the banks were last week. Not great. They didn't move the stocks, but they're okay. We got a lot of reports this week, and I'll walk you through some of those. Got the Fed meeting coming up next week, and then seasonality right after. We start August. So, for whatever reason, August, September tend to be really nasty months, and October tends to be tricky. We're slowly taking profits, and then I'll show you some of the stocks we're taking some profits in. Actually, bought a stock here or there too. And then we want to review all the events that occurred with the government here recently. Some of it's really interesting. Some of it's genius. And the market outlook. So we're looking at the Federal Reserve. What they need to do is set the stage to cut rates next week. If they don't set the stage, then I think the market's going to take that pretty negatively. Last week we got a lot of the bank earnings. JP Morgan, we're using that as a barometer. The earnings were good. The stock didn't really do anything. So it's kind of telling us that maybe it's just the bank group because it hasn't moved a lot, but maybe some of these earnings are already baked into the stock market, some of these good earnings reports. So this is the second test coming up. So we got Google and Tesla coming on Wednesday. It's really important that they discuss autonomous driving and to give a good outlook on that. So we're really focused on autonomous driving. We think that could be really big. There are several semiconductor companies reporting. That's important as well. You know, there's two things going on with semiconductors. One, you got the big long cycle with AI, right? But then you have the short cycle, which is cyclical pickup in their business. So they were shipping at rates that were below what the demand was, and now they're coming back. Their customers are ordering in line or better than what the overall demand is longer term. So we want to make sure that that cyclical pickup is there. Okay, as we go into August, September, October, it depends on what the Federal Reserve says, how bad the seasonality is going to be. So who knows? Maybe set up with good earnings and the Fed doing what they should do. Maybe we don't have the seasonality, but more times than not we do. And I would just start to prepare for 5 to 10% sort of correction during those months. Maybe it goes down and bounces back quickly. The technicals are strong. You know, they're very strong. So this is a 5-year chart here of the QQQ. And you see it's in a nice upward trend. And that upward trend is at a rate that's darn near close to 30%. Now we drew the line starting here in September of 2022, kind of towards the bottom, not at the bottom. And then drew that line to correspond with all these other tops going through here. We think around 580, we're 565 now on the triple Q, that it's a good shot that we're going to see a pullback. You need to digest some of these gains. That's one major move. So as you can see here, we had quite a correction occur. I would just start to think about really taking some profits. If you have any aggressive stocks in your portfolio that did really well, just be more defensive about things. Now, the one big beautiful bill, I gotta say I like it now that they have it all done, put together, and I'm looking at it through the lens of what it does for the economy. So we see about $5 trillion in tax cuts over 10 years. That equates to about 1% additive growth to the economy per year. So that's not bad. That's pretty good actually. So nice backdrop to the overall economy because of it. And then what else is going on is all this bonus depreciation and expensing. Well, hard to say what that's worth, okay? That could be worth a lot more than what we currently expect. So if you can write off your R&D, why wouldn't you do a little bit more R&D? Or if you can expense a plant right up front for the whole thing or a good part of it, build those plants. Trump's bringing back a lot of capital spending to the United States, maybe as much as $15 trillion. So that's half the size of our annual GDP. That could really add in a big way to GDP growth. So we like what's going on. I think it's a nice big positive. The Genius Act. Okay, I think the Genius Act is actually genius. I like it a lot. So the bill provides some regulation around stable coins. And it says you have to back the stable coin with cash, government securities, like bonds, treasury notes, or other liquid assets. So we think that what this ultimately does is it preserves the U.S. dollar as the reserve currency. So maybe it doesn't add a positive, but it certainly takes away a negative, and it increases demand for maybe treasuries. So as this kind of plays out over time, we're going to have these coins come out where you can electronically send U.S. dollars pretty easily. That's beautiful. That's genius. So I like it a lot. It does a lot for our currency. Trump Epstein. Oh, come on. If there was something actually there, don't you think we would have known about it by now? So Trump being a scumbag with Epstein, I don't think so. It just doesn't, the dots don't line up. And it kind of came out at the same time as the Obama administration. I'm sure they saw this coming, right? Their issue with the Russian hoax. So there's going to be some criminal charges filed there, and probably as well with the Biden auto pen. So that's why this popped up. But the importance of this is just to throw it aside. There's nothing fundamental to come out with this stuff. It's kind of interesting watching the news at night, but that's about it. The Laffer curve. Okay, I don't know if you're familiar with the Laffer curve or not. We studied it way back when in business school. Okay, what it says is what is the best tax rate to maximize government revenue. And I'm sure the Democratic side would say, okay, it's 100% or really high, right? And I think Kennedy actually caught on to this, that if you lower the tax rate, you're going to possibly increase. That's where it all came from, right? You possibly increase your revenues. So as you cut taxes, the economy grows, and it grows at a faster rate than what you lost in terms of the taxes that because of the lower tax rate. So the Republican side of it, they see it as, okay, always lower taxes increases the revenues for the government, and that's not the case. But again, I like the thought about that, lower taxes. I think that's essentially a good idea, unless you can't pay for everything that you're trying to buy. Okay, so the point of me telling you about this is I think the Trump administration is also using a curve like this for tariffs. So the T could stand for tariffs as well. What is the appropriate tariff rate to maximize the revenues for the government, but yet not destroy the economy? Not to put all the burden on the consumer. So is 20% the right number? Maybe it is. Maybe that is the right number where that the tariff rate, the tariffs get buried by all different ways, coming in and what we're buying, the retailer kind of absorbs it, or the manufacturer absorbs it, and maybe a little bit by the consumer, or prices go up or they go down in some manner, or maybe the company that's importing it, maybe they cut some costs in other ways. But 20% may be the right number to maximize the tariffs without hurting the economy. And I think about this, why it's genius is because it darn near pays for our interest expense. We got $4 trillion of goods that we import. 20% of that's $800 billion. They're pretty close. We've spent about $1 trillion on the interest expense. So that's a big win. I like it a lot. The tariffs are not a negative thing in my mind at this point. Profit taking. Okay, we've been talking about this for a while. We want to take some profits as we go through this month. Get prepared for a slow August. if it's not slow, we're going to see some probably downward volatility. As you know, we like Pepsi, and Pepsi had a beautiful quarter regarding their international business. That was really strong. The domestic business was weak, and we can blame GLP-1 drugs on that, and people aren't going to be on that forever. So it's not a long-term thing, in my opinion. Nobody wants to be on a drug forever with all the side effects associated with it. So the Pepsi business will come back at some point. Oh, by the way, to get off that GLP-1, we need the Veru drug to do that. So it's a stock that we like a lot. It's about a year out. So Pepsi stock has been sideways for a while. We mentioned it several weeks ago that this looks like a coiled spring. Kept popping up above the 20-day a little bit, and started to move and got that good quarter. So it's gone from roughly 128 to 145. That's a nice short-term move. We put a big position of that in our more aggressive tactical portfolios, and then we cut it way back to a 1% position as it popped up like that. So AMAT's another example of where we took some profits. We didn't catch this at the bottom, but we were pretty close, and then had a big move. ASML reported, gave negative guidance. ASML is an important company in the semiconductor space. Gave negative guidance for next year. That'd be roughly flat. So that didn't throw us, so we took our profit there. Now, with some of the proceeds of this, we invested in Baxter International. Baxter is a medical company, and it's gotten too cheap. You can see this chart here. It's been an ugly chart. So it's down around where it bottomed out before. They report on July 31st. I don't think it's going to be a bad quarter. I think it's actually going to be pretty reasonable. They might get some currency benefit out of it as well. So you might have a little upside surprise going here for Baxter. I can't find the reason why the stock is where it is. So we think a reasonable price target for Baxter is roughly 16 times earnings, or $40 a share. So at 27, that's roughly 50% upside. That's a big move. So if I was a trader, I might buy some call options on this prior to the quarter. You might get a 10% pop out of the stock and even bigger pop out of those call options. Again, all sorts of risk around these type of short-term trades. I mentioned the Nasdaq being way overbought here. Okay, if you're a trader, you might want to buy some SQQQ. If we get up here or it starts to break down, that'd be a nice little short-term trade. Again, it's a triple inverse on the Nasdaq. Lots of risk to it. I wouldn't recommend people doing it, but if you're a short-term trader, this might be an interesting thing to do. Now, our emerging healthcare, our marketing group's putting this chart together for all the performance of this strategy. Come to my website, Patrick Adams CFA, or go to the PVG website. It's on there. You can see all the performance by year and quarter and all that stuff. You can see it broken out, what's the beta and all that. So you can have a lot of detail and all the disclosures around that performance. But this is the performance since 2012, up 926% versus the XBI. That's the biotech index, right? Lots of smaller companies in here as well as larger companies. That's up 306%. So we did 3x the index, okay? That's pretty darn good. How did we do that? It's by picking really good individual stocks. We don't have to own 100 plus stocks like the index does. We don't have to own 50. If we only got 10 good stocks, we'll just own 10 good stocks. So we do a lot of research on this stuff. So as you know, we do loss averse investing, and this is not loss averse. We try to have some loss averse characteristics to it, but this is high risk. This is biotech. You think you got a really good drug, and for some reason it doesn't work on phase 3. So that's possible. We got some really good data points coming up. We got a number of different catalysts on the stocks that we own. We have some clinical data coming out. We have approvals We have a couple that are going to get approved, so that should have a really big movement. We got one company, Fortress Bio. They have a drug that they'll get lots of royalties from if it's approved, probably about equal to their market cap. They'll get it every single year on this approval. We think it's highly likely they're going to get approved, and that data point is coming in September. And then Anavex. Okay, I don't know. This might be my favorite, but I sure like this company. It's got an Alzheimer's drug, went through clinical trials, all the clinical trials, phase 3. It looks good. They filed for approval in Europe. Okay, that's coming in December. That seems to be coming along. I don't hear of anything negative happening there. They have a schizophrenia drug, phase 2 results on that, and that'll be in August. So that's coming up. I believe it's going to be August. And then I think what the street is looking for is a meeting with the FDA to get a path for approval for their drug in the U.S. So as the company discussed a long time ago, is that the timing of this would be sometime around the fall. And so we're thinking late September, early October, maybe by the 15th of October, they have their meeting. If it's a positive meeting with the FDA, this stock's going to go up in a huge way. So there's a lot of upside here. Ultimately, we think this could be as much as a $10 billion market cap company, is currently at around $1 billion. So for sure they'll sell it, at 10 billion or maybe even lower. But it's got a lot of upside. So what kind of led us to this conclusion about about meeting with the FDA and everything? So they filed last week for a $300 million stock offering. With $1 billion market cap, you don't file for a $300 million shelf without expecting some good news coming and being able to sell that stock at a much higher level. So our chart here just demonstrates the power of compounding. So if you get something that works well, a strategy that works well over the long term, you can make some big money. I think that this emerging healthcare strategy fits, a small position in most portfolios. Maybe if you're an aggressive investor, maybe you do a bigger position, but it sure does nicely over time, and we're set up for some interesting data points coming out over the next several months. If you have any questions with anything you do, come to my website, Patrick Adams CFA, send me an email or ping me through the video, or come to the PVG website as well. You can see all of our strategies there and set up a call if you're a financial advisor or individual investor. We're happy to help you. Take care. I hope you're having a great summer.